Yo, what's up YouTube? It's Mr.BuyTheDip back here with another video. I want to talk to y'all about keeping the balance between long-term and short-term investments. Knowing when to enter a trade, knowing when to exit an investment is very, very important, okay? First things first, this is one of those weeks where tariff letters are coming back and we're seeing these stocks drop. But just last week, we were at all-time highs, all smiles on our faces. But here's the thing, right? A couple of news articles, a couple of meetings can certainly destroy a stock's momentum on an upward trend. Okay, monthly we're still up on AMD, and I'm still up on my investment. All right, but this 134 was just 145. It was just 144. Okay, and here's a couple things I want to tell y'all. And I really want to keep bringing this over and over up again because long-term investments are very important if you want to live a comfortable life, if you want to retire, if you don't want to work past the age of 40, 45, right? This is the way to do it. But when we talk about lower risk over time, okay, market dips hurt less in the long run. Historically, major ETFs recover and grow. There's a reason why I say this, right? The 2020 scare, that was a buying opportunity. If I held S&P 500 in 2020, let's see where my investment would have been right now. Look at this major dip, okay, March 16, 2020. Look at this. There's a big drop off, all right? And we go as low as 222 a share, okay, which dials all the way back to about 2017. It set us back a few years. But I want y'all to see how this recovered. We get a nice little mountain peak in 2022, which was 456, and then we hit 500 for the first time ever in 2024. Right, now take 2024 to 2025, we're gonna hit 700 sooner or later, and this may take a few years, a couple years, but 700 is gonna be one of those levels that if it gets hit, everybody's gonna maybe be shocked, but maybe just double down more on why they invest in the S&P 500 or invest in the QQQ. All right, the QQQ is another ETF that is very, very useful. It is an ETF that I will close my eyes and buy. And if you're younger and you have a more aggressive approach, you could definitely invest in this. Okay, yearly it's up 10.99%, but overall, if you see again same patterns over and over again, 2020 we have this major dip 2020, but look how it evens out overall. A huge uptrend, right? So, and so it's only been 5 years since then. So if you would have just took, let's say 5,000, 6,000 and threw it around here, okay, without looking at the price, you throw down December, November 2020, your investment now would have been, at a solid return. You would have made more than 60-70% back on your money, rather than you having that in a savings account where you're just piling money on top of money. You're not really letting that money grow for you. All right, that is the beauty of these ETFs, and that is why I like them. All right, now I do think QQQ could be slightly of a riskier approach because they track mostly tech stocks, and they're more tech heavy, but you can see the returns compared to S&P 500. You can see how this ETF is more aggressive, but the return is there as well. If something is more aggressive and you're throwing more money down in it, and it goes up more than it can come back down, that is a good sign. Okay, now when we talk about focuses on tech growth, we talk about Apple, Microsoft, Nvidia, we talk about AMD, we talk about these big hitters. I want y'all to look at Apple, Microsoft itself. When I look at Apple, overall yearly it's down, right? Let's look at the history again, because we were talking about 2020 again. 2020, it was down again. Then we have a major return back in 5 years. And you're holding an ETF. I'm telling y'all to hold these stocks 10 to 15 years. You're not just holding, you don't invest in the S&P 500, you don't invest in the QQQ to pull it out a couple weeks later. I mean, you could do that, right? Sure, go ahead, do that. But if you really, really want the long-term return where you're making 90, 100, 150, 200K in the long run, you got to get into that, that buy and forget mindset. And this $250 is a perfect example. I didn't work at all for the $20.50 I'm up on this. And imagine if I have $250 invested, I'm getting $20,000, $30,000, $50,000 for money that I haven't did nothing. I did nothing for that money. Now, your value definitely matters. So compound interest take care of most of your returns, and that is where the money's made. All right. So we talk about broader market exposure, 500 blue chip stocks. So Walmart is part of that 500. So 500 big companies in the United States is a whole basket of the S&P 500. If I invest $250 in the S&P 500, I'm investing basically in the U.S. stock market. And if you believe that if the U.S. stock market in the long run can get you back 30, 50, 70% back on your money in the span of 5 to 6, 7 years, you are definitely correct. And you should make the decision to invest in these certain ETFs. Me personally, I would always say this over and over again. I'm just telling you guys what I would do. Starting at the age of 15, 16, right? I've been researching these things for a minute. And I never invested the money. I wanted to figure out how this thing works. I started getting the money later on, right? And I really started investing with just $15. And ever since then, I've learned more and more about safer investments. It's very important to make those investments because NVIDIA could be tanked down literally next week. We've seen it happen April 7, 2025, right? When you look at NVIDIA back in April, right here, we're talking $96 a share. It is very volatile. So if you're long on a single stock, single company, it's going to be very volatile. You need to find a way to balance it out. Okay, be like, oh dang, I'm down 20% in Nvidia. Oh, let me check QQQ. Let me check S&P 500. Let me check this ETF, this dividend stock I own. Oh, well, I'm up 12-15% on that. Let me just take some profit now because I'm down. Okay, that is how you make money moves. So the most simple thing you can do is balance out your own portfolio. If you want to be a long-term investor, strictly long-term, and just work, not generate any income, just work, and have the investments on the side, sure, right? But I like to take money. I like to make cash. I like to make money while I'm if I have a 9-to-5 or a business on the side. Okay, money makes money, as simple as that. Now, Walmart, another defensive stock. This is one of those stocks I'll be long on. One of those long-term stocks. I could close my eyes and throw money in this because of it's a good long-term safety with dividends that support compounding. So when we look at Walmart's overall growth yearly, it's up 42%. So it beats the S&P 500 for 3 years. All right, so this is 3 years worth of gain you would get in 1 year. I want y'all to think about this, okay? Because a lot of people are not thinking like this. You see 42% up in a year, sure. And I caught this stock, right? I was looking at the stock, not even right here, okay? I want y'all to see what I invested in this my first time around. It was 2024. I bought $6 of Walmart, right? If we go to March 4, 2024, I want y'all to see something real quick. If I go to March, this is where I bought the stock, right, in 2024. Right here. I have 2 trades right here at $59 a share. If I would have put, incredible amount of money here, let's say 10,000, 5,000, look where my investment would have been by now, right? But it's all part of the process. Big stocks have, splits all the time. Walmart's going to have another split probably at $200 in 2 years. They do this purposefully just so people can buy more and more shares. And guess what people are going to do? They're going to buy more and more shares. And what they're going to do, they're going to keep making money off of money. So I wouldn't say I necessarily missed a chance at Walmart at all. No, that as much as the stock go up, one news about tariffs, I want y'all to see where the stock can go down to $81. So do not think you ever missed your chance. But if you see big dip buying opportunities, take the money out of your savings. All right, take some chance. Take some smart risks. Don't put your house on the line just because you think a random a meme coin named fart is gonna blow up. No, stuff like that doesn't happen. There's a very less chance of it actually blowing up. So keep these things in mind. Mr.BuyTheDip is out. This video was specifically talking about balancing your portfolio to be an aggressive investor, but also being a safe investor. All right, thank you guys for watching. Like and subscribe.